one of them. Today I will show you how exactly why discipline beats prediction and how this week market setup could catch you off guard if you are ready. So there is a backstory I will tell you about myself. When I first started trading, I chased hype, stock, bought whatever trending on Twitter, ignoring the economic calendar completely. And I thought I was being bold. The reality, I was just gambling. I'd wake up, see Tesla or Apple trending, jump in, and by the end of the day, I would be holding heavy losses. One week, I remember losing almost half of my own account because I went all in on a play right before non-farm payroll came out. I didn't even know NFP was scheduled that same day. The market whispered and my stop got hit instantly, and I sat there thinking what was happening and how it happened. That was my turning point. I realized trading isn't about predicting every move. It's about preparation, it's about discipline and risk management. Once I start making down kick events, preparing for volatility and treating trading like a business instead of a casino, that's when things start to change. So let's bring that lesson into this week. What do we have coming up? CPI, Consumer Price Index. This is big one. Inflation data drives everything right now. A hotter than expected CPI print that sends yield higher and usually pressure tech. A cooler number, market breathe a sigh of relief and risk asset rally. What is NFP? NFP is non-farm payroll. Jobs data matters because the Fed is still watching employment closely. Strong jobs, more pressure to keep rates higher. And weak job, maybe some relief, but either way, this report checks up market. Fed speeches, several Fed officials are scheduled to speak, and remember, the Fed controls a narrative. Sometimes one sentence from the Powell or another official can move the entire bond market. As we have seen today, we had a news, and that same thing happened today. So which in turn drag equities with it. Now why does it matter to us trader? Because market don't move in a vacuum. They move around events. If you are trading Nasdaq futures or even just holding a big tech names like Microsoft or Tesla, you need to know how these events hit the tape. So there was the last month CPI released. Within minutes, we had a massive swing that wiped out both longs and shorts who weren't even prepared. Same things here. This dip was after NFP. The market doesn't care if you are bullish or bearish. It only cares if you are prepared. So here is the bottom line. Preparation beats prediction, as everyone knows that. You don't need to be a fortune teller to succeed in trading. You just need to know when volatility is coming to your way. Have a plan and stick it to it. Discipline isn't sexy at all. It doesn't make flashy headlines, but it's the real edge. Mark events, plan your trades, and don't let the market catch you sleeping. So here is what I want you to do today. Pull out your calendar and mark down at least 2 or 3 key events this week. Even it's a CPI, NFP, and whichever Fed speeches matter most to you traders. Then, instead of guessing, build your trading plan around those events. That's how you move from being a reactive trader to a prepared trader. And make sure you are here tomorrow, because I'm going to dive into something that took me years to understand. How money quietly leaves one sector and flows into another, and how you can spot it before the crowd. If you found this useful, hit the subscribe button so you don't miss it. Preparation beat prediction. Let's trade smart this week.